Ben ritrovati martedì mattina su Floor del New York Stock Exchange. In questo momento indici ancora vicini alla parità, ancora tanta incertezza, appunto siamo vicinissimi come sappiamo a livelli record. Ne parliamo con il mio ospite qui su Floor che è Mark Otto, Designated Market Maker per Knight Capital Americas. Mark, thank you so much for being with us again.
Thanks for having me back.
So Mark, we are very close to the record for the S&P 500. At this moment, 10 points away. How big of a deal is this?
I think it is a pretty big deal simply because the Dow hit the records and really there wasn't as much reaction. There was more caution in the air. I think traders are really looking for it to be, I guess the S&P will actually confirm, being up at these levels. So technical analysts are claiming that the market's been top heavy, is ready for a pullback. They're also claiming that we should hit heavy resistance between here, 1555 and 1560. So the record, so we're right here grinding up against it. So 1565 is after that. So it'll be interesting to see if we could actually get through this. So you could get this sense that the market's really just been grinding for the last couple of days.
And a lot of people are saying that it's so difficult for the S&P 500 to reach that record because there is no real big reason. There are too many issues that are unresolved. Europe, one of those, of course, and then the budget discussion in Washington. Do you really think that the S&P 500 will be able to reach that level now?
I definitely think it is possible simply because equity share volume is really low. So that's sort of a double-edged sword. I mean, you don't get as much support if we drop, but then again, we keep climbing on light volume as well. So there's definitely that potential. There are some unknown variables with the Eurozone that could definitely impact the market, and I don't really think it's priced into the market. So in that case, you could see a dramatic fall. But right now, it seems like market sentiment is to the upside. Momentum is, tending to the upside. Still, the breadth of the market over the past week was up, winners to losers 3-1, then it went 2-1. So now we're less than 2-1 today.
And the VIX is on multi-year minimum at this moment, so that could be another indication.
Absolutely. It tells you that even though traders are speculative, there isn't fear in the market right now. So fear, was struck, 2 weeks ago when we saw that Italy was having trouble forming government, and all of a sudden you saw that VIX spike 30% in one day. So it tells you a couple things. It tells you that type of scenario isn't in the market right now. So the reaction certainly could be there. However, now it seems as though, the old cliche is like the trend is your friend is what everyone is saying right now. So it makes it tough for a technical analyst to call the market as far as being top heavy and ready for a pullback. However, it also is forcing traders to actually enter equities. And people who have watched this rally take off and haven't entered it, maybe they're tied up in treasuries making 2.04% on a 10-year treasury yield, and they're looking at the market, the Dow and the S&P are up, 10% and 9%. It's really difficult to stay out of equities at this point. That's why the dips are so shallow.
They don't want to miss out. So you think that this week is going to be crucial? I mean, we are not going to have many indication until tomorrow. We're not going to have any important economic data. But do you really think that we can take off this week?
Well, the potential is there. I mean, tomorrow we have advanced retail sales everyone will be watching for. Thursday we'll have initial jobless claims, and we'll also have the CPI. Moving on to Friday, we're going to have PPI, Michigan numbers, Michigan confidence numbers, Empire State manufacturing numbers, and CPI. So there's enough macro data as the week goes on to sway the market. So I'm sure everyone's sort of looking for a catalyst to go one way or the other.
Yeah, and if we really see a sequestration effect on the economic data, I mean, if we really start to see that might be a catalyst, but, to just go down.
Absolutely, but it's right now as it stands, defense stocks that you would think certainly would be impacted by the sequestration, they're continuing to grind higher, and in some cases, they're hitting, yearly highs and all-time highs. So it's at this point, it doesn't seem like the fear is there.
It's a known event for now.
Absolutely. Yeah.
So give me some level. You already told me the 1555. Now we are 1554. So that's the level to monitor.
Right. 55 to 60 is what technical analysts are saying is going to be heavy resistance. Above that, if we do crack it, of course, the number is going to be 1565 that everyone's going to be watching for. On the downside, on the dip, 1543, 1535, and 1526 is support going down.
What is your scenario, Mark? I mean, if you have one, if we really reach 1565 by the end of this week, do you think that it's an important moment? I mean, from then on, we can really see the indexes, speed up high, like the sky is the limit, or you think that there is no real reason right now, so people will just stay around there for a while?
I think the way to look at it at 1565, it's a pivot point. So it does have the potential to go either way. Either we hit the number, it's sort of a non-event, and then it could cause a pullback simply because people are saying, why are we up at these levels? However, it could be a catalyst to continue higher as traders are forced or shorts are pressed. There's a number of scenarios that can impact that. So I would say that it's definitely a pivot point.
So it's definitely a big deal.
Yes, absolutely.
Thank you very much, Mark. We are going to monitor, of course, in the next few days. Thank you and have a great day.
Thank you.
E grazie a voi per l'attenzione. A domani.